What's up, traders? Andrew O'Connell here with Pristine Capital. Let's talk through the Fed Wednesday and its impact on the market. The S&P 500 finished today down 2.51%. Heading into today's session, the market was implying a plus or minus 1.61% move for the S&P 500. So we did move beyond that expected range. The Nasdaq QQQ, which has seen continued relative weakness, down 3.43%. Our IWM small caps down 3.32%. The dogs of the Dow were only down 1.55%. The ARK Innovation ETF got smoked, down 4.83%. And the TLT long bond ETF really was not down all that much, only down 0.43%. Volatility barely changed for all of these indices, despite the fact that we had some major moves. This is definitely a positive divergence that we are seeing right here. The breadth was very weak. We only had 9% advancers in the small caps. We had 9.8% total at volume, and the trend model flipped from a +3 reading to a +1 reading. Post-market movers, we saw some earnings movers. We had Confluent and we had Etsy moving to the upside. On the negative side, we did have Roku down 17.71%. They whiffed across many metrics, and especially their guidance was very weak. But let's talk about the main event, which was Fed Wednesday. Now, there's a lot of really bad takes about this on the internet. Let's talk about what we were expecting. The three metrics that we were really watching for today's session was, what does the dollar index do? What do bonds do? And what happens to future expectations for rate hikes? Well, the dollar got a little bit stronger, which was an X, no good. Bonds were a little bit weaker, that's an X, no good. But look at this. These were our odds yesterday. Coming into today's meeting, we had an 81.7% chance of a 75 basis point rate hike, right? That is exactly what we got. Now, for this December meeting, there was a 50.9% chance that we were going to get a 75 basis point rate hike. Well, now there is only a 43.2% chance of getting that 75 basis point rate hike, and there's a 56.8% chance that we're going to get a 50 basis point rate hike. So overall, the market is interpreting that the Fed is getting incrementally more dovish. Now, that's not going to match what you're going to see online, because everyone's just going to see the market went down. That means, oh my gosh, Powell was so hawkish in his presser. That's probably what you are seeing. I find it very interesting. What I like to do is form an actual opinion based on data, based on probabilities. Then what I was doing intraday is when the market flipped green, I was looking to see what the narratives were on Powell and the Fed, and if they got more dovish or more hawkish. And of course, everyone was like, oh yeah, everything is all good, the whole 9 yards. Then once the price action turns red, then everyone says, oh my gosh, Powell was so hawkish. But based off of the data itself, you can see that the market is pricing in higher odds that the Fed is going to be a little bit more dovish. Now you might say, well then why did equities sell off? And I think the nuance that we have to be cognizant of here, this was our heat map, looked like a bloody mess for today. And we continue to see, this was yesterday's heat map. Look at these mega cap tech stocks, what they did yesterday, and they just continued those losses today. But you might say, so why were the markets down so much? Well, I think there's a lot going on here, and I think you have to look at the bigger picture. Because, I mean, let's be honest, the Fed, they signaled they were going to be getting incrementally more dovish. I think the word pivot, everyone has a different definition of what it means. And I think most people, they, with like their goldfish brains, they just think of it as like, well, a Fed pivot means they're going to reduce rates back to zero and do a QE program. And they just take it to the full extreme. For me, a pivot is really just getting on a rate of change basis incrementally more dovish than the Fed was in the recent past. So we can just say like incremental dovishness. Well, we got this news that the Fed was going to be getting incrementally more dovish weeks ago. Remember, we put this out in real time. This was from October 21st, Daly started mentioning how they're going to start thinking about reducing the size of the rate hikes. Then remember, we got the news from BlackRock. We got the news from the Wall Street Journal, Nick Timiraos, and they echoed this. So likely what happens is the market gets out in front of these things, and we have to remember this day where we put in this massive green candle. I know this was 2 whole weeks ago, so it seems like an eternity ago. This was on a day where we got a really hot inflation number, and the market ended up rallying, and we got this was about like a 12% move to the upside in the S&P 500. The market was anticipating the dovish pivot that we got today. Now it does seem that there is a bit of a sell the news going on here, where everyone knows, the smart money knows, that the Fed is prepared, if we get some good inflation data, to reduce the size of the rate hikes. And the market knows, based on looking at the Fed fund futures, that the Federal Reserve should be done with their rate hikes, for the most part, at least pausing, by the end of this year to the early part of next year. They're expected to top out the Fed funds rate somewhere between 4.5% to 5%. And by the end of this year, they'll be pretty darn close to that level. Now, I believe with today's press conference, all that good stuff, it was really just, Powell being honest with the market. Like, remember, they got incrementally more dovish off of a super hot inflation number. But Powell's not going to keep getting more and more dovish if they don't start to see some real hard evidence. He pretty much told everyone, like, guys, we're not going to pivot if we just keep getting these really hot inflation numbers. And I think it would be absurd for anyone to have the expectation that they would do that. That's why it's all going to come down to what happens on November 10th when we get the next CPI number. Really what Powell teed up was, guys, if we get a nice CPI number in November, that is where we will turn more incrementally dovish. So they kind of teed us up. They said, hey, we're prepared to move these rate hikes a little bit smaller. We're prepared to be in the latter innings of this tightening phase, but we need to see the data. And the market sold off on that today. But I really don't think that this is like a huge shock to the market or anything like that. Or, oh my gosh, he was just so hawkish like we've never seen him. We've been seeing weeks and weeks on end where the Fed has iterated that same message that Powell did today, that, hey, inflation is priority number one. Of course, financial stability is a top priority as well. And the Fed showed that when the financial stability was on the line, they did turn incrementally more dovish. With that said, let's take a look at the price action, because the price action was pretty vicious today. So let's check this out. S&P 500, we ended up closing below the 50-day simple moving average. This sell-off did occur on high relative volume. And now let's take a look at what we're working with heading into tomorrow. So we have our monthly value area, and we have our monthly value area high at 3789.25. That's going to be a key level that I'm watching for tomorrow's session. I'm actually going to mark that with an alert right here. So I think this is definitely a good level to monitor. I think if we start trading above this level, then we can say this was just a pullback to the 20-day simple moving average within this more bullish sequence. But I think what we really don't want to see is a finish below the 20-day simple moving average for tomorrow. So we pulled right into support. Let's see what the market does. A lot of times the first move after a Fed meeting is just like some knee-jerk, huge reaction. Then you end up going the opposite direction, as soon as the following day. So we're going to have to see what happens tomorrow. Now let's talk about where the real weakness in the market is. The NASDAQ really has not made any progress off the lows. Look at this. After this bout of earnings, the NASDAQ, for all intents and purposes, we're back at the early October lows. Of course, there's the chance that we trade below this lower wick. But again, on the NASDAQ as well, we are trading down to support. We're right at this monthly value area low. So I think it's pretty important to see what the market does tomorrow. My expectation is we're not going to get a cascade. I do believe this was a selling of the news. We'll have to see what happens. Russell 2000 pulling back into support. we're retesting this 50-day SMA and also retesting the top of the monthly value area. In our Dow Jones, also down a smidge. The Dow Jones is really still looking pretty solid. We're only pulling back to that 10-day EMA. Now let's take a look at the dollar index. This is pretty important. Again, the key measure for tomorrow's session is also, does the dollar index just keep rallying? Because we've had 1, 2, 3, 4, 5 days of rallying for the dollar index. But as of this point, we're still making a lower high. What we really do not want to see is this dollar index go back to the 114 level. And now let's take a look at the bond market. 10-year Treasury futures, these are trading down. They have leaked lower. And again, we're testing this monthly value area low. Same thing for the 30-year Treasuries. We're also trading a bit lower. So again, I believe it's all going to come down to November 10th. Do we get a bit of a lighter CPI report? That's going to make all the difference. And as of right now, almost every day that I look at this Trueflation dashboard, which is a real-time indicator of inflation, it's hitting lower and lower levels every day. Right now we're at the lowest level year to date. So I am expecting that we could get a light CPI number for November. And I believe that could really ignite another leg of this rally. For tomorrow, we're going to have to see what happens. One stock that really just bucked the trend today was SMCI. Before the Fed meeting, we were seeing a really nice relative strength in some technology stocks, some growth stocks. And this name in particular, look at this high volume breakout. This stock, just incredible. And it just goes to show that while mega cap tech is really languishing, look at Google. Google took out this VPOC today. There's other names and new leadership that is emerging. Let's take a look at some of these others. Apple had a weak session as well. So I think it's, to be honest, I don't see this as being horrible. Mega cap tech with their earnings reports, horrible. And the market, for all intents and purposes, is still doing pretty well, despite that downward pressure from mega cap tech. That being said, that about does it for today's market recap video. Hope you all have an awesome rest of your evening. We will see you all tomorrow.